Coming up on Market to Market, tariffs continue to dominate the world economic discussion, making another attempt at defining waters of the U.S., getting help from a small insect to battle a big problem in corn country, and commodity market analysis with Don Roose next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, March 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The story of tariffs has replaced inflation as the feature in nearly every newscast of local and national origin. The economic snapshots are starting to reflect the threats, actions, and consequences of decisions involving taxes on goods coming in and out of America, as well as the spending and business operations in this country. This month's Consumer Price Index revealed inflation pressures eased. The monthly gain was 0.2%, and the year-over-year slowed to only 2.8%. The Producer Price Index was flat on the month. The year-over-year number moved to 3.2%, down 0.5% from January's reading. The S&P 500 entered into a correction as it has dropped 10% since its February 19 peak. The Federal Reserve will look at these data points and other inputs for guidance on their next decision on the key interest rate. Not lost on anyone is the talk of tariffs, which has become a daily occurrence as countries near and far from the U.S. launch higher import duty taxes on each other. But the impact on those who depend on shipping goods out of the country are stuck in the middle. Peter Tubbs has more.
The daily tariff gyrations from the Trump administration are concerning some sectors of the agriculture industry. New tariffs on steel and aluminum were announced this week, resulting in counter tariffs on American goods shipped to the European Union and Canada. The tariffs are expected to raise costs for many American manufacturers. Almond growers in California are bracing for price declines as the world reacts to new tariffs. The almond industry saw wholesale prices drop 30% as a result of tariffs during the first Trump administration. While domestic almond production has declined since the 2020 crop year, the percentage of the crop that is exported has increased to over 70%. Almond growers are concerned their product will be targeted at a time when production costs have increased.
Right now, the producers aren't covering costs. The price will fall even further, and you'll see orchards being ripped out, farms being lost. There'll be farms for sale up and down the valley.
The European Union has proposed a 20% tax on American whiskey that will take effect on April 1st. Trump countered with the threat of a 200% tariff on European wine and spirits. At Bro Brothers Distillery in Kentucky, the tariff situation has put plans to export their whiskey to Canada and the EU into uncertain territory.
Pretty much suspended indefinitely. Now we have tariffs today, and tomorrow we don't have tariffs. It takes us about 30 days to prep a product to ship to wherever it's going.
Kentucky produces 95% of the world's bourbon supply, and the hyper-competitive sector relies on exports for continued growth. Retaliatory tariffs can have a chilling effect on the industry. Tariffs are paid by importers of goods, and the costs are commonly passed on to consumers. For Market to Market, I'm Peter Tubbs.
Last week, the Supreme Court brought to an end another case deciding who was responsible for surface water quality. The High Court ruled the Environmental Protection Agency had no authority to impose certain restrictions on water discharge. The decision called into question, again, how the EPA will be able to regulate water pollution under the Clean Water Act. David Miller reports on the next course of action by the Trump administration on the subject of water quality.
As soon as I get into office,
EPA Administrator Lee Zeldin, as part of making what he called the largest series of deregulatory moves in the history of the United States, opened the door to revising the controversial Waters of the United States rule.
Our goal in going through this process is not to be an activist in going through a procedure. This is to simply follow the rule of law.
EPA officials will start their review by getting input from stakeholders that include many who Zeldin says were sidelined during the Biden administration. Zeldin is directing his team to put a focus on clarity, simplicity, and improvements that will stand the test of time. The WOTUS rule was finalized in 2015 at the end of the Obama administration. Of the legal attempts to further define the rule, one case, Sackett versus the EPA, ended up in front of the Supreme Court. In the 2023 High Court ruling, the ability of the EPA to enforce certain parts of the 1972 Clean Water Act was greatly reduced. The National Cattlemen's Beef Association and the American Farm Bureau Federation came out in support of the review and restructuring effort. Listening sessions are planned over the next few months. For Market to Market, I'm David Miller.
What started as research in the fields of New York has come to the Corn Belt and helps pull a thorn from the side of growers: rootworm. Keegan Shields' father made a career in academic research. Following his own military career, Keegan picked up what has now become the family business based right in the middle of corn country. The big idea and problem starts with a tiny natural creature. This conversation is part of a recent MTOM podcast and is our cover story.
Corn rootworm was the focus of a lot of that research. And in the summer, you go dig corn roots to kind of score the roots. So you've got to go dig all these things up. His lab also took about 500,000 soil samples over the life of the technology. So helping out with that.
Persistent Biocontrol is the name of the company, and it's you. You're it. Why the name? Yep. And why do this on your own? Why not go work for somebody that's already kind of in this field doing what you're doing?
We sell these microscopic worms called nematodes. They live in the soil and they attack soil insects. And that was the solution for this invasive pest that's only in northern New York. It's only in 4 counties. It's what my father worked on for 30 years. These nematodes will seek out soil insect pests, kill them, and then reproduce. So it's this really cool, natural, self-replicating system that we've figured out how to harness for farmers.
It's only 4 counties in New York. I believe last time, let me look at my notes here. Yeah, rootworms everywhere. So what's different about those 4 counties in New York versus the rest of the area?
So my father kind of stumbled on to the fact that this works in rootworm. The original research is for a different insect. But once we figured out that, we could help farmers across the Midwest with rootworm problems, now I think it's something worth commercializing. So there's a lot of different soil insects that these microscopic worms will go after and control. We have a 7-year continuous study in rootworm, basically looking at control through rotation and after going after rootworm. So corn's really our first market that we're going into. It's what we're most familiar with, but it's really just the first market.
Corn in Texas and the way it's grown, and even, I shouldn't just say corn, but some crops in some states, there is no rotation. It is the same thing year after year after year. When you mention rotation, does it mean something different down there than it does where you're seated today?
Yeah, a lot of the farmers we work with are corn on corn for going back 20 years, right? They don't rotate, and that's really stressed out put a lot of pressure on the rootworm traits that are the current solution. The farmers in New York are mostly dairy farmers, so it's a 4-year alfalfa corn rotation. So it's a little easier, but yeah, absolutely. I mean, we work with some guys out in Nebraska and southern Minnesota that I think have been corn on corn for like 50 years under irrigation or rain fed. So and a lot of the guys we work with are they're corn on corn because they're feeding some type of livestock, right? So I think they couldn't afford not to rotate, right?
So rootworm traits, you mentioned that is sometimes in the trait of the seed to get rid of the rootworm.
Yeah, it's the current solution. The seed companies have figured out how to insert a gene from a bacteria into the corn plant, so that the plant produces what Bt toxin, which is harmful to rootworm. What we're seeing are widespread resistance to these toxins. So we've listeners may be familiar with herbicide tolerant weeds, insecticide tolerant insects, and now we've got these trait tolerant rootworm. There's been a big shift over the last 5 years. 5 years ago, we had trouble getting people to admit there was a problem, but people were kind of hush hush about it. But now I think it's gotten more widespread. The problem's worse. So it's really about using every tool in the toolbox to try and control rootworm, and that's what the nematodes really provide. Is they'll come in as an independent mode of action and kill off all those resistant survivors that would normally make it to adulthood and cause more rootworm pressure and damage. And it's something that you only have to apply once.
Once over how long?
So our data goes back 30 years. So the lawyers won't let me say forever, but a long time, more than 1 year. Which again, that starts to make us sound a little snake oily, right? But we've got the data. And I think this year we crossed 100,000 acres have been treated with these persistent nematodes. About 65,000 are in New York, and the rest across the Midwest.
The full MTOM is available now.
Next, the market-to-market report.
The USDA report left no change in the balance sheets, and the market returned to tariff and weather watch. For the week, the nearby wheat contract added 6 cents, and the May corn contract fell 11 cents. The soy complex is dealing with some pressures from EU tariffs and vegetable oils. The May soybean contract lost 9 cents, while May meal added $1.50 per ton. May cotton expanded $1.30 per hundredweight. Over in the dairy parlor, April Class 3 milk futures added a quarter. The livestock market was mixed. April cattle put on $2.90. April feeders improved $3.05, and the April lean hog contract cut 72 cents. In the currency markets, the U.S. dollar index shed 19 ticks. April crude oil found 9 cents per barrel. COMEX gold gained 81.70 per ounce, and the Goldman Sachs commodity index subtracted more than 3 points to settle at 549.75. Joining us now is regular market analyst Don Roose. How you doing, Don?
Doing great. Thanks for having me back, Paul.
When we started the week, well, we start any week, it seems to be by the time we get to Friday, the story changes dramatically. Wheat is the one that was probably the most impacted by the USDA report, but that wasn't the biggest impact on the commodity. What was the biggest mover for you in wheat this week?
Well, I think number one, I think the wheat market, it's the wrong time of year to be overly bearish when you're starting to worry about the weather, particularly when the funds are short, a big short in the market, and we have some dry weather concerns around. So, the wheat market, I think it just balancing back, showed its true colors, reacting not that negative to a negative report.
But it was influenced a little bit by corn this week too, right?
Well, I think some of it goes back to a lot of spreading going on. The trade has been really heavily long the corn market, heavily short the wheat market, and I think to end the week with the concerns, it's kind of people scrambling back to home base. And, you can't say enough about with the tariffs going on, Paul. I think you have to kind of think of it and trade it kind of like a mini weather market.
Do you trade corn like a mini weather market too?
Yeah, I think, if you look at a weather market, you don't know what the next weather forecast and what the next move's going to be. So you just have to kind of prepare yourself accordingly, technically. And I think that's what's going on. I think that's the way you look at these tariffs. Treat it like you're in a weather market. And that said, we got the weather ahead of us. So no short volatility ahead.
As we record this, we're about to have a little system that could cause some moisture in the plains, some snow in other places. We're getting to that spring planting season where we're watching it. But let's talk specifically about corn. I'm very curious. Are we at a point right now where technicals have taken over from fundamentals in determining corn?
Well, I think when you look at it, the technicals really give you the price direction where you're really at. It'll add and subtract premium pretty fast. The fundamentals, I think we know on the corn market are for the most part kind of positive. And that's why we went up to 521.5 on corn. We just kept marching to the upside. And then we ran into a lot of tariff headaches and we had the liquidation. But no doubt the funds wanted to be long the positive one on the grain, corn, and on cattle. So I think that's what you're looking at.
We'll talk about the funds because I'm curious about them in soybeans as well. But when it comes to old crop corn, if you haven't emptied the bin, have you missed that opportunity, do you think?
Well, I think when you look at it from a marketing standpoint, opportunities come and go. And, we did have a pretty big run to the upside, 521.5. Those are only numbers you could have dreamt up in the fall when we were talking about. So hopefully we get another run. That was one big one, so you got to take advantage of your opportunities when they're there. Now we're on a big pullback. And, the bottom line is you ran into a tariff problem and pushed us down.
Well, let's talk tariffs if we could. Phil in Ontario, Canada, who we've been watching the discussion a lot with what's going on with Canada and Mexico, he asks on X, tariffs and talk of tariffs plus good South American weather have dimmed what look now to be a good grain marketing opportunity. Do we now rely on traditional seasonality in late spring for the next good marketing opportunity?
Well, I always look at marketing as kind of like a card game. You have to, as the cards come out, you'll know what you're going to do. And I would say on the positive side, you're probably down to some weather scares that we usually get. We usually add risk premium into the May timeframe. So I would anticipate we're going to get weather premium added back. It's just a matter from what level. But right now we have a spike bottom in the July corn at 451.25. So at least you have a tradable bottom if we can get the right card to come out of the deck and push us to some up signals.
What is the deck telling you about the soybean trade?
Well, the soybean market, it's the best of the worst. It's holding $10. It's dialed in a lot of negative news, a big soybean crop in Brazil, fairly big crop in Argentina, but we have the acre battle ahead of us. And I think the March 31st probably going to show that big down acres on new crop corn and vice versa on soybeans and corn, big acres there. So I think the soybean market certainly has a lot of downside potential if the wrong thing happens. Could you go at or under 9 is very possible with the fundamentals. Remember, China's our big buyer, and we're having some pretty tough talks with them.
So is it still the case that tariffs are influencing the soybean trade the most of the three commodities we talk about?
Of all the commodities, I think it's corn and soybeans are the most have the most negative influence on. So the wheat market to a lesser degree. So yeah, I think soybeans. When you have a big crop coming out of Brazil, when you have, that's the supply side. The demand side is very shaky, and a 380 million carryout is not really a positive. So, but you can shrink those carryouts pretty fast with weather, Paul.
Let's talk about weather in South America then, because in Argentina and Brazil, a couple of different stories about the weather differences there. How's that influencing us here?
Well, I think when you look at Argentina, they basically, I think they have the dry weather behind them. It's improved greatly. The Rosario exchange took the production down, probably doesn't go down anymore, probably goes up from here. So I think when you look at it, remember, Argentina exports about 1.4 billion bushels of corn. Their harvest is going on right now pretty aggressive, so that's coming at us. Interesting, though, I think a lot of that corn goes into Brazil. Brazil this week dropped their import tariff to 0, and so they must want Argentine corn waiting for the second corn crop. So I think it tells us that there's a little bit of world demand in South America.
For the cattle market, the dollar helped it early, but what helped it late this week to rally?
Well, quite a surprise. I mean, it looked like we had cattle going to trade, 198, and at the end of the week, it was a ratchet up, trading cattle as high as 206 late. Big move in the cattle that pushed the futures market up. Still have a key reversal in October cattle on back, and live cattle and feeder cattle key reversals. So next week's going to be a big jump ball. Does the technical lead us to the downside, or can we gather to the upside on the fundamentals?
Well, the fundamentals of the feeder market were about tariffs, and there was the amount of it's going to cost too much to import cattle into this country. Is that going to override what you're talking about?
Well, and I think this is I think the bottom line, when you look at all this, you can go back and forth on some of these things, Paul, but the bottom line is going to be the demand. We've talked about the supply tight for a long time, gets tighter for this reason, but there comes a point at the upside at what price does the consumer just resist the purchasing? And, I think there's a real fear that we could go into a recession.
And there's talk late this week about some of the budget stores that lower income, I think it's under 40,000, have pulled back their spending. Is that the class, the income that's going to influence maybe some of this livestock market?
I think that's exactly right. I mean, the top tier of people can only eat so much beef, so then it's left with the rest of the people. So I think it's, watch it close, because there's certainly other proteins that are cheaper, and stuff, what goes up does come down eventually. We know that. I mean, look at the price of eggs.
Well, exactly, and we had a sell-off in hog market there recently, but is that I think I read something about that maybe that's a risk-off situation there. Is that what's going on with the hogs?
Well, the hog market, I think, is most influenced by the export. 25% of our pork is exported. So, and Mexico is our biggest buyer, so that's the concern. And I think, no doubt, when we had the big tariff fight March 4th, hogs were pasted down over $4. That's the same day corn put in its spike bottom, hogs put in its spike bottom. Then things kind of, normalized, if you will, call it normalization. So, the hog market on its own, I think, was shaky, up over 100, 105, and don't need any more help on the negative side.
All right. Well, hate to leave it on that, but we have to. Thank you, Don.
Thank you, Paul.
All right, Don Roose, everyone, and we are going to pause the analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. Finally, a thank you to all who've made pledges of support to this and other public TV stations. We have spent the last few weeks asking for your support, and many of you have done that. If you've held out until now, we ask that if you value this program, please call or make contact with your public TV station to offer your support. You are the key in our continued coverage of rural America. Next week, we are taking an experiment in cover crops to the next level. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.